Welcome back. This is Shirley Davis, and I'm back to another video. I want to welcome back all my subscribers and welcome to my new viewers. This is the channel where we talk about my top stocks. If you're new, please click the subscribe button. Also, please like and share the videos if you enjoy the content. I want to give a shout out to the Stop Struggling team, Eric Byrd of Stop Struggling Now. He's been giving fantastic live streams last week while we go through this market turmoil. So today I want to talk about 4 or 5 stocks that I like that'll be dollar cost averaging in the next couple, I would probably say the next year or two, really. The first one is Amazon. As you can see, I own Amazon here, my Robinhood. Kind of dollar cost average in this one. I'm still down 17%, but I am dollar cost averaging into Amazon. So I like Amazon. I want to dollar cost average into this stock, and hopefully I'll start to be in the total return of gains. Okay, so Amazon.com. I'm looking at buying more Amazon. And we do know that Amazon was trading at about $2,000 a share, and I was trading only at $116 a share. I want to keep buying it. It's very affordable from $2,000 a share to $120 a share. Okay, if it drops down into the 108 and 106, I'm going to keep buying it. Okay, because I really like what Amazon has. They have AWS services, and their e-commerce business is just huge. Okay, so Amazon.com, I'm excited about. I'm still going to be buying it for the coming year 2022 into 2023. Okay, the next stock that I'm looking to buy this year is Alphabet. Alphabet, again, is trading at $2,300 per share. It looks like on July 18th, they will be splitting the shares. So as you can see, I already own some Google stock here, Alphabet. I will be buying some more Google after the split. I'll dollar cost average in so I can get some of the shares of Google at, I think it's going to be about 125. I'll get some of the shares at 125, some shares at 130, maybe even 118. So once Google does a split, I'll be looking to get those shares as well. Okay. All right. The next stock I like is JP Morgan. If you look at JP Morgan over the last 6 months, they've been down over 25%. I like to see that, because that means I can buy in at the lowest price. Okay, I like JP Morgan way below the 52-week high of 172. So I'll be buying some more JP Morgan stock. Right now it's trading at $117 per share. I'll be buying some more JP Morgan Chase stock. Basically, that's a bank stock. Okay. Also, they do pay a 3.41% dividend. So I like JP Morgan stock. Trading at 117 a share as well. So I like them. Another stock that I'll be buying next couple months is Crown Castle. Crown Castle has been down over 14% over the last 6 months, and it is a REIT. So it is a REIT, and they pay a dividend of 3.36 per month. Now, when I say they pay a dividend, this yield is 3.3% per year. But also they do pay that partial of that dividend every 3 months. So I like Crown Castle. Again, this is a technology company. They basically do the real estate under the cell phone towers. So I like Crown Castle International Incorporated. Okay. And then the last stock, a little bit more risk, ChargePoint. I own quite a few shares of ChargePoint. I still like ChargePoint under $20. And if you look at the last 6 months, they've been down over 22%. Now, I do like ChargePoint better at $10 or $11 per share, but I think ChargePoint is a great stock long-term. I'll be definitely buying more over the next year or so. Okay, so ChargePoint does not pay dividend, but if you look at the 52-week high is $36. And pretty much, I don't think it'll get back to $36 per share, but I do believe in what ChargePoint is doing, setting up more charging stations as the EV market expands with, Toyota, Hyundai, even Volkswagen, many of the major auto manufacturers will be using EV charging stations, even though the simple fact is that some people will just charge at home, and it probably in most cases, the electric vehicles, people will own one gas car and one electric vehicle, and the electric vehicle be your in-town car. Okay, so that's where we're headed. ChargePoint and other EV type components or EV vehicles in most cases. Okay, so ChargePoint, I like ChargePoint, under $20 per share. And pretty much, let's go back to my other portfolio. Now, if I'm looking at the year, some of the best performing stocks of the year is ConocoPhillips. ConocoPhillips has held up pretty well this year, just for the simple fact that it's, oil. And also Microsoft. Microsoft has held up pretty good this year, considering last year I probably was up probably 90% or 100%, but Microsoft has held up pretty good. And, Tesla always holds up, but pretty much Tesla is just independent. It just runs in its own circle. Okay. Now, the great part, what I like here, I like Apple. Apple, I've been dollar cost averaging. I'm going to continue to dollar cost average in Apple. Okay. Apple right now is trading about 141. It's a great stock to be in as well. And as I mentioned earlier, Amazon as well. As you can see down this list, the best performing stocks of this year, anywhere from 1% all the way up to 100%. Okay, so I have Marvel, ACI, Albertsons, FCX. I like Dollar Tree. Okay, this is Dollar Tree, DLTR. Dollar Tree is a ticker. So pretty much in this bear market, you can get some great stocks for a reasonable price. Okay, even Nike is a stock that trades about $150 per share. Okay, so in this bear market, you'll get some great stocks at reasonable prices. So that's all I really wanted to talk about today. Again, Amazon is a great price right here at 116. I think it can come down into the single digits, 108 and 106. And then Google will be splitting its stock later this month. It will come down to about 125 a share. So just a second here. And of course, here it is, Google's email they sent to me from Robinhood. Reminder, Google split on July 18th, 2022, 20 for 1, occurring somewhere around July 15th. So that means the stock will trade somewhere around the end of 125 per share on July 18th. So that is the news. Again, these are some of the stocks that I'm going to be dollar cost averaging into the new year. So I want to thank you for watching. Thank you for listening. Please like, share. If you'd like to get some free stock, please use my Robinhood link below. And everybody have a fantastic weekend.